Hello, I Tasin Sultana, Assistant Professor, Department of Commerce, Government First Grade College, Brazeton. In this session, I will discuss emerging opportunities for investment. The learning objective of the chapter is to provide an understanding of mutual fund as an investment outlet. The outcome of this session for students will be able to understand the emerging opportunities in international investment settings. In the previous session, we have understood the concept of international fund management. Emerging opportunities refers to the various means and ways through which an investor can invest in the Indian investment environment. Before investing into the various investment options, these are the things which an investor has to keep in his mind. Frame network of investment is the first point. The Indian investment scene has many schemes to offer to an individual. On an analysis of these schemes, it appears that the investor has a wide choice. A vast range of investments are in the government sectors. These are mostly risk-free but low return yielding. The private sector investment consists of equity and preference shares or debentures and public deposit with companies, which will have a minimum amount of risk. The second is inflation. The Indian investors is faced with a price rise. The prices of all essential commodities have been rising. Under these conditions, the investor has to consider the investment opportunities in the economy. The next is taxation. The Indian investor is to a great extent affected by the taxation policy of the government. He would plan his investment in a manner so that he would have to pay a minimum direct tax. His investment would be directed to those schemes which would give him tax relief. Next is stock market conditions. The stock market is the nerve center of investment of any country. The Indian investor has seen the stock exchange undergoing several changes since 2007. Due to the government policies, there was a positive climate and an individual investor's mood and sentiment was for investing in corporate securities. Next is manipulation of share prices. An investor who has power either through position deals with the investment climate in the country. An investor who has power either through position status or money has great control over the investment outlets in the country. It is the ordinary middle class investor who suffer a great deal because he is unprotected in the Indian environment. The next one is riskless versus risk investment. The dilemma faced by the Indian investor is the reconciliation of profitability, liquidity, and risk of investment. Government securities are risk free and the investor is secured. However, to him, the return or yield is very important as he has limited resources. Tax planning. Tax planning versus profitability. The limited resources that the Indian investor possesses must give him both the benefit of tax planning and profitability. However, in India, he has to choose between planned taxation measures and the aspect of profitability. Taxation planning does not yield any profitability and it has to compulsorily save in Provident Fund, life insurance, or NSC. The individual hopes to derive profitability from investment in new shares where he gets the dual benefit of profitability and savings. The next are the various software packages which are available for management of the portfolio. The first one is personal capital software. This is the simplest software package which help an investor in understanding the cost of his investment. In the case of mutual funds, there are many costs in the form of loads and fees and brokers commission. So the second software is SEM Crop asset management software. The software has been specially designed for portfolio managers who can analyze investment options from a wide array of investment opportunities. They are able to and analyze each investment and make a decision. The portfolio manager can use the software through the computer interface, which provide analysis of risk of securities and track the past behavior, and computer interface, which provide analysis of risk of securities and track the past behavior and trend of the securities through integrated simulation and strategies. Next to software is Investment Account Manager. This software has been in use since 1985 and it is used extensively in the world. Investment Account Manager Software 2.0 has wide range of tools with a centralized portfolio management platform. The next is Fund Manager Portfolio Management Software. This software is useful for individual investors as well as professional managers who manage funds in corporate organizations. It is suitable for active daily and intraday traders who require quick information. The next software is Personal Portfolio Manager software. The Personal Portfolio Manager software can be used as a portfolio management software by individual investors as well as professional managers. And the next software is Starter Portfolio Manager software. This software has been specially designed by traders for trading. The tool is used for analyzing technical data such as charts, investment in multiple currencies. I hope you have understood the concept. Thank you for listening.